Hi there, Tim Allen from 360 Property Group, and welcome today to Anthony from My Mortgage Freedom.
Thanks, Tim. It's great to be here.
No, thanks for coming by. I thought today would be a perfect opportunity to talk about what's happening in the real estate market, more specifically the off-the-plan market, and to tie that into what's being seen in the finance market, two very correlated markets.
Absolutely.
The last 5 years we've seen year-on-year growth in the real estate market in Melbourne between 10 and 20% per annum, which has ultimately been unsustainable, which means this year it will take a year off. It's a breather, it's a bit of a down market, but what that really means is it's a perfect opportunity to buy if you're in the right position from a financing point of view. What's happened is the big four have slowed down their appetite for lending, and it's led to some of the more unknown lenders come into the market.
Yeah, definitely. It's off the back of APRA legislation and policy changes last year, which has relaxed in the last 6 months. Also the Royal Commission, so that created a lot of challenges for the major banks, a lot of fines off the back of that with improper lending and not going through the correct process. But it has then created a lot of opportunity for non-bank lenders to come into the market that see the opportunity, want to lend money. So there's no doubt there that there are options out there for clients. Just they may not have had a loan with these lenders, but what we're finding is a lot of clients are becoming more comfortable with non-bank lenders, and they may be the only option in some cases.
And those lenders understand that the property market fundamentals are basically unchanged.
Absolutely, yeah, no, they've got no doubt. I mean, the LVRs that they offer are similar to banks, the amount you can borrow against the property, and they understand that it is a subdued market, but it is a market that is sustainable. I mean, if you look at the history of the Melbourne or Australian property market over a long period of time, it has been quite sustainable growth. A few bumps along the way.
That's
so
right.
These lenders have no issues with lending money at the moment, and especially when you've got major banks that are stress testing a lot of people's loans a lot harsher. Maybe their serviceability ratios are at 7 or 7.5%.
And that leads to fear, doesn't it?
Absolutely. It leads to a lot of challenges, a lot of fear in the market because the major banks aren't lending when there are a lot of options, and we're seeing a lot more opportunities for clients.
But ultimately, interest rates are still low. Population growth is 100,000 plus per year.
Yeah.
We can't house all these people. The economics behind the Australian economy at the moment are fine.
Yes.
So it's really going to be a short-term phenomena and a really good time to buy.
Oh, without a doubt. Like we're even seeing in this short period of time, the major banks have seen that they've lost market share from the non-banks, and they're slowly trying to get back into the market. Their loan pricing is getting a lot better over the last few months. Their cashback offers, some banks are offering up to $5,000 cashback to refinance to them. Some of the banks, so it's definitely going to start heating up. So I think the worst is behind us from a lending point of view, and we're seeing small improvements, but improvements nonetheless.
And it's not going to take long before all of a sudden the auction clearance rate goes up and the market takes off again.
Correct.
So at this point in time, over the past few days even, we've seen some vendors, some developers entertain offers to keep momentum in their projects. So what that really means is you just need to put your best foot forward, be in a position to buy, and don't be scared.
Absolutely. Yep.
I saw Marty Fox today, or it might have been a couple of days ago, in one of the online publications said fear is when people are fearful, it's time to be greedy, and when people are greedy, that's the best time to be fearful. So now is certainly a time where everyone is fearful, which actually means it's a good time to buy.
Yeah, well, some of our most astute investors and multiple property investors are actually really active right now.
Yeah.
Getting themselves positioned, getting themselves ready to get the bargains.
And to take advantage.
Without a doubt, yeah.
So that's the message. Thanks for listening.